Today we're focusing on Disney, specifically on their Hulu acquisition. And Andy, I know you mentioned that they own 60%. So basically the deal is they agreed to this deal that gives Disney full control immediately and will send Comcast's stake in Hulu to Disney for at least $5.8 billion. But what does this really look like for the companies?
Well, I think this is just Disney getting into streaming in really the most remarkable way that they could. They aren't the first ones. You know, there's Netflix and there's Hulu before that, and there's a lot of streaming apps out there. Amazon's doing streaming. Everybody's in streaming, but Disney seems to be more like, we're late, maybe, but more importantly, we're gonna do it very, very right. And when you think about the assets that Disney has, it's really incredible. You can see from that chart, this is purchase intent mentions, people saying that they're signing up or subscribing to Hulu. That's up and to the right dramatically. We see the same thing with just the leaks or the kind of pre-release for Disney's streaming service of its own. And so we think Disney's in a really good position to be the king of streaming very, very quickly, because that Hulu ownership that they have gives them the technology capabilities. You know, they own ABC, they own ESPN. From a sports angle, they can capture streaming like no one else can. And, you know, just their assets under management in terms of the content that they own is so remarkable. That's what all these other streaming companies are trying to do. You know, they figured out the technology really quickly, and now they're trying to figure out the content side, whereas Disney's coming at it from the exact opposite angle, and probably the smarter angle, and that is, we know how to do content. Now let's get the technology piece in place.
Andy, do you see a day where Disney, through Hulu, says the only place you can watch Disney content is on Disney and on Hulu, and that includes ABC and ESPN? Is there a day where they're just going to drop the hammer and really disrupt all this?
They might. I mean, Disney's one of the smartest companies, you know, in the world. I think if you go to their theme parks, if you go on their cruise ships, if you do anything involved with Disney, it's done really well. And so I don't think they're going to do anything to totally disrupt or, you know, harm their distribution until they have it all sealed together really well. But it's certainly a possibility, and it has to make other streaming services and providers nervous that Disney has so much leverage now in terms of the content that they can put out and how it gets distributed.
So Andy, there's two things that I think really are going to impact this space more than anything. One, the first streaming service to really get the real-time aspect of the sports right, as this movement to legalizing sports gambling and the wagers and all that goes into that with the live wagering. The first company to execute right on that, to me, is going to be a real winner. But then we look at the other side is, if there is some type of an economic downturn here and we look to places to cut costs, this is the discretionary area to me. And when I look at something like Amazon, I'm not necessarily subscribed to Amazon Prime for video. I'm using that more for delivery and the other perks you get with Amazon. To me, maybe that's the one that will be left because I need it for so many other things. I just happen to also get a video service too.
Yeah, I think that's a good point. And then I think, you know, if you're going to have one that is purely for entertainment, and you start to think 2-3 years out what Disney could put together in terms of a bundle, essentially they just created an end around for the cable companies. They have ESPN, they have ABC, they have Disney movies, they have all of this stuff. And so if there's going to be one winner in your entertainment budget, the odds are pretty good that it's going to be Disney for a lot of families out there.
I just see a day in my life where it asks me, would you like to watch the Bears versus Packers? Click yes. Would you like to bet $100 on the Bears versus Packers? Click yes. It's going to be one of those. It's going to be all right at my fingertips.
That is a very scary and expensive day, yes. I think. But I mean, the noise on social media, as I'm sure you saw, Andy, is just remarkable. People are really excited about Disney Plus. People are very positive about the streaming service, and you can see that definitely reflected on Twitter. But our first tweet is from Trader Stewie, who says, Disney has been showing very good relative strength throughout the entire May correction and now looks to be picking up again. 140 price target still looks reasonable. So my question specifically to Disney stock is, how is it impacted by their competitors like an Amazon, which is so much bigger than just streaming like you mentioned, but Netflix and those other companies and Comcast?
Well, the one thing we just did, and I think Kevin pulled this up on our screen, is the company profile.
Right.
they're a lot different when they have 42% of their revenue coming from parks and resorts. So they're going to be insulated to that portion of their revenue stream.
Right.
But when you look at Amazon and that not being their primary business, to me, Netflix is still their big competitor in the streaming space, but Netflix uses a lot of their stuff. As they pull their content back and they become, a real force to be reckoned with here, I think what Andy's pointing out, if one's going to win, Disney seemed like a logical bet in terms of just the plethora of things that they can offer.
I guess, does there have to be a winner, really? Because it seems like me personally, I subscribe to all of them, and I don't know when that day will necessarily change, if it ever will.
These businesses were invented for you, Jenny.
I know. I am a sucker for.
I'm surprised that the advertising isn't like, we've got a new product, Jenny Horn.
I know. I try them all. It's so bad. But our next tweet is from Hedgehog Options, who says Disney will earn at least $8 a share in 2020, maybe $9. That puts it at 17.25 times forward. If the market takes us up to 20 times multiple in November 12th, Disney Plus launch, that takes you to 160 times. So this is basically the prediction for Disney going forward with Disney Plus launch. It's extremely, it's remarkable, really.
If you think about it, here's one real thing, and then I want to get to Andy, is if you take their company profile, and it's their parks and resorts is the biggest part, but then there's about four or five little small parts that all come up to Disney Plus.
That company profile is deceiving, because that is one chunk of basically the same thing.
Exactly. And Andy, is that the plan? They're going to put these all together, and it's going to be one massive entertainment vehicle.
Yeah. I think that is the plan. And when you think about the competition, Netflix and these others, what they don't have is a park that families can go to and spend $1,000 a night to stay at. That upsell ability is unbelievable. And so Disney has other ways to monetize their content other than just the subscription charge. Others don't have that. Amazon does through Prime, but Netflix and these others don't have that. And so they're creating content just to sell content, whereas Disney's creating content to sell content and to sell experiences, which are high margin, high price tag items. And I think that's a real winning philosophy. It's been there since the early days of Walt Disney himself. And it looks like the Disney Corporation continues along that path of, we're going to do things really right and maybe not as fast as everybody else, but we're going to do it really well and we're going to monetize to the max.